Good afternoon or good evening, everybody. This is Dennis Wilborn with the Active Trend Traders for making money trading stocks and ETFs. The regular free webinar we do every Friday just to kind of get a snapshot of what the market has been doing and what it may be doing going into next week. Skip got us started by basically saying, yeah, what a ride this week has been. Absolutely true. However, if one was basically this week provided one of two opportunities. One, it provided an opportunity to let your stop losses do what they were supposed to do, and therefore you were trading according to your system. Or if you hung on to some of your trades, you may have been wishing, gee, I really wish I would have had my stop losses in place. Because there was some significant downside for the week, and also so it was either a yes, my system worked great, and or I've got to be better prepared next time. I've learned something this week, which is important. As long as you learn that lesson one time and then you don't have to repeat it. I want to remind everybody that all the materials we do present are for training purposes, and only traders should always paper trade any new method prior to the risk of their own personal capital. Past performance is not an indication of future performance. A little bit about me. I want to show everybody I'm going to jump I'll jump to the charts here shortly. And just remember, your job as a trader is to wait for the best opportunities. Anybody want to raise their hand to say, hey, we tried to pick a bottom this week, or you tried to pick a bottom in some of the things you're trading? I know we had a signal on the early warning alerts, and it's still a valid signal, and so we'll be looking for some kind of reversal going into next week on that, see how that goes. Yeah, I want to remind everybody about the 5 pillars of active trend trading. One is the 5 pillars are basically one. We help our premium members understand what to trade, strong growth stock and or premium ETFs, therefore what to trade. Secondly, when to enter based on back-tested proprietary signals. And so this trade on BABA back at the beginning of the year, jumped in here on 123 as we broke out and moved to new highs. When to exit based on classic technical analysis. We exited in a couple of places here. One, when it approached past resistance. And then secondly, after breaking out, it reached our upward target, or at least got close to it up here about 200. Oh, you're still in TCA? That could be working out for you very nicely, David. Well, there's an alert going off in my ear. So when to exit and then what to expect. What strategy we're going to use. In this case, we're buying the stock. And then lastly, what to expect. The probability of success on our trades is about 65%. So that means 35% of the time we'll have a losing trade, but 65% is how the system is tested out and been traded out across the years. So the objective of today, I want to get that in place to begin with. Objective, timely actionable intel review at the end of the week, market review. This week for me personally has been kind of like Murphy's Law of trading. Those of you who've been trading long enough, you know that if you have a special event that's coming up, and I had a very special event this week. It was my wife's birthday, and we had both her twin sister and her older sister in town over the complete weekend. They left on Wednesday, and so I needed to be away from the market. And so I would review the market, look at the market early in the morning. But it basically, Murphy's Law of trading, one of the laws of Murphy, with regard to trading, is that the week that you have to either be traveling, something is taking your attention, is oftentimes the week when the market decides it's going to move the most. And that's exactly what happened this past week. there are a whole series. I'm going to write an article sometime about Murphy's Laws of Trading. It can be kind of fun. We'll take a look at the stocks in the ETF performance. And remember, you have been given the keys, so now it's time to learn how to open the door. As of about 9 o'clock this morning, active trend trading, we're up about 7% for the year, and you can see the indexes have sold off, down for the year, down from last year's highs. And a significant reversal from where we were on the second. On the second, we were, Dow was up 4% for the year. And so in total, we've lost the 4 plus lost another 3. So we're about almost down about 8% for the year on the Dow. Same thing for the NASDAQ, the S&P, same thing for the NASDAQ, same thing for the composite, same thing for the Russell. And so let's take a look at some charts here. I want to pop up one chart to begin with. You're going to go, why are you showing me this chart? Well, one, this is the VIX. This is the weekly chart of the VIX, and as you can see, this is going back to 2015, 8/24, 2015. The VIX hit a high, outside the range of its normal motion. So yes, clearly VIX has been kind of trending down, but over the last 2 weeks in particular, we get the big sell-off. VIX is spiked up. As it turned out, the day that it spiked and opened up here at 50 actually turned out to be the one good day. If somebody would have jumped on a trade first thing that morning, you got a real quick dead cat bounce on the indexes, and that was basically about the best positive trade for the week. However, what I wanted to show you is, okay, here's the NASDAQ, or the VIX, and it kind of measures the volatility, market volatility. They applied a lot to the S&P. Well, back here, last time it popped up that high and then dropped back down into a shooting star type formation. What happened the week after that? Because typically VIX, when the VIX spikes and falls, that's a time to be looking at buying the market. So just, so keep that in mind. Well, what happens now if we miss the initial thing? What happened let's go to the SPX, which is kind of what it measures. That was 5/24. Well, what happened on 5/24? Well, on 8/24, 2015, we get a nice little spike up, and it goes into a consolidation period where it kind of stops going down, and then about 8 and 2 is 4, 6. About 6 months later, you get a rebound, and it pops back up and takes off on this tear that was known as the rally of 2016. What about NASDAQ? What did the NASDAQ do during the same time period? Well, NASDAQ has actually popped up and is positive for the day. And so, David, nice trade on TZA. Okay, here is 8/24 right here. And as you can see, similar type situation. This was the first major low that, and in this particular case, change this out. How much did we get a correction? We corrected from the high, which was here, down to here, which is about 19%, almost 20%, almost slipped into a bear market, and then rebounded that same week along with and then went up, made a first new high or back up to resistance, sold off again and again. And then on the 6 months later, in February 2016, it went into its rally mode. Well, how much have we sold off on the NASDAQ so far this year? Well, let's click on there. And it actually got down to about 12%. So, it still has a way to go, but it does have some strong support down here at the 620 level. And we'll pop over and start looking at the other charts. But I just wanted to show that to you that we may be in a position where the where the market's maybe looking for a little bit of a bottom so they can potentially bounce, but we're not trading the first move to the bottom. We'll wait for it. Remember what happened? It popped on up here, then rolled over. So if we're trading, and I'll start with the NASDAQ. If we're trading the NASDAQ, it looks like, yep, looks like we're getting a bounce in between the 100 and 200-day moving average, which is excellent. Getting a pop up. Up until this, well, and right here, the green candle was the 1 day move on Tuesday of this past week, and I said if you were up first thing in the morning and could have jumped on that, that would give you the best move for the week, and then it just rips to the downside the rest of the week. It looks like buyers have finally come in. Buyers have finally come in. Here's a level of support here, support/resistance. It's a 62.39 level. TSI on a daily basis, looking like it wants to turn over, but we're flipping down to the downside hard with TSI on a weekly chart. So we're not out of the woods yet. What I would see is basically a bounce from here. Okay, a bounce from here back up into approximately the 8-day moving average or this area, and then, I mean, it could go higher, and then a reversal off of this to come back and retest over the next several weeks, and then with a potential rebound. So just be careful buying the first bounce, because sometimes the first bounce comes back and bites you in the bottom, in the rear. And so that's what's going on with that. Let's go back over to S&P. What's S&P doing to us? SPX. 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 Again, real nice bounce off the 200-day moving average, where you would expect it. Let's see if we get a TSI tick up and we get some retesting down here. And that would be a signal to potentially get back to go long, but be aware of this overhead resistance that is formed by the 50-day moving average, which is the yellow line, and the other 820 has done a bearish cross. The 8 has now crossed below the 50. Looks like the 20 wants to continue down and do the same thing. So while this may be as I said, the second dead cat bounce, we just want to be, we want to be careful with it. And let's see, Russell, RUT, gosh, RUT, there we go. Is it me or is it the new computer? Again, getting a nice little hammer here. Strong level up here in the 50-day moving average of resistance. Throw a fib on this to give you some idea of where it could go. And again, where is that 50-day moving average? It's just below the 618 retracement. So to see this retrace back to there would not be surprising. How much of a move would that be? Well, that move would be approximately, from where it is right now, about a 4.93% move, which if you're trading TNA, that's going to be approximately 15%, give or take, just a little bit. And so, yeah, dead cat bounce, skip, that's basically after a real hard sell-off, you're going to get some initial bounces where the buyers come back in for a little bit. They call that in, but it doesn't get back up to past high. They kind of call that a dead cat bounce, especially if it turns back around and takes out those lows again. I want to cover one last thing. I want you to take a look at NDX. If you're an ETF trader, NASDAQ. Okay, NASDAQ has this level of support down here at the 60-20 level. Strong level of support. Took a while for it to break through that, several weeks in fact. So that is one level of strong support. Could we go there? Sure, potentially. But what I want to show you is look how it differentiates or is different on the Q, which is the the ETF for the NASDAQ. You see similar type situation, similar type candlestick, similar type, pattern looks a lot alike. But when you flip over to, okay, TQQQ, which is the 3-time leveraged, as you can see, price action actually fell harder and came closer to hitting that level of support. And it may still do that, but just be aware that those are the kind of, that is because TQQ has to buy different entities to emulate and make it to a 3 times the daily move of the NASDAQ. It has to do it, by doing so, it just distorts the chart slightly. And it depends on which of the ETFs you're trading, but it just, it does distort it slightly. So let's take a look at the rest of the story here. Okay, what's the charts? Gold, as we've been highlighting, if I were to basically be looking at 2 different entities, 3 stocks to be, 1 stock, 2 different ETFs to be trading, I'd be looking at YY, JNUG, and JDust. Why and JNUG and JDust? Because typically in the February and March time frame, you get a sell-off in gold, and or just a stabilization in gold. Looking to be a buyer back when it gets down here to June or July. So patient, waiting bar, wait for it to come by. NASDAQ typically gets a bid. It can show some weakness during the month of February. So we want to be ready for any type of bounce that takes place towards the end of February. And again, remember, February is a short month. We will look towards the end of the month. Same thing with Russell. Can get a bid towards the end of February, get a nice quick run up for a couple of months sideways, and then look for the run up at the end of the year. So we'll be looking at those. Here's where we're sitting with the active trend trading system. Strategy 1 up about 7.76%, strategy 2 and strategy 3. Right now is a great time to be looking at what am I going to buy, what stocks are when this this correction / pullback is over. It has been a more significant pullback so it's a good time to be looking at what we want to buy in order to prep for that. Did 1 strategy 3 trade this week on Tesla. It was an earnings week. Picked up about $800 there. Both BABA and Spiders, we let them run to the downside, and they actually increased the value for us. So here's where we're sitting as of the end of the week. S&P, the Spider, strategy 3 is up 25%, BABA's up 25%, and Tesla's up about 4.7%. So we're right on time. Just something. Get one here. And I'm going to pop up real quick. Yeah, we're in good shape. I've got time to just cover 1, actually 2. Okay, go baby. That's TQQ. Again, this is, it's looking like it got this bounce down here and has reversed really hard. This is a volatile puppy, man. It was down almost 20 points for the day, and then has reversed higher. So I want to show you why. So 1 hour. Let me go over here. Let me go here. Why? Looks kind of interesting, bouncing off the 100-day moving average. TSI daily chart got a little bit of a tick up. This may be now just be aware the Chinese stocks have been getting beat up pretty significantly. And it has dropped the 50, but it does have a downtrend line. If we get another bounce down here around the 100-day moving average, is about 110 or so, that may be an interesting little trade to go up. or if we take out the high of today, which is taking out the high of the low day, but it's going to put you right back up into, guess where? Resistance formed by the 50-day moving average. So that's one. Keep an eye on that. JNUG. JNUG just got ripped to the downside today, as you can see here. However, what happened? It came back down here and has found a level of a bounce zone. All right, and so let's see if our TSI. Okay, right now we're showing some TSI on the weekly chart being positive divergence. We have a two-line cluster on the market forecast, which is good. We had a three-line cluster on the market forecast on a daily chart. What's the rule of thumb for the market forecast? Typically, if you get a three-line cluster, that's a bullish cluster, that's all three of the momentum indicators down below the 20 level, that within 1 to typically 4 days, you're going to get some kind of a bounce. And that may be exactly what's going on here. So that looks kind of interesting. TSI way down low, hasn't bounced yet. And on the flip side of that, like I said, if you want to just focus on trading JDust and, okay, as you can see, JDust made an excellent pop down here. Again, three-line cluster within 1 to 4 days, you get a reversal. And and the reason I encourage people to take a look at these, okay, I'm not going to make a recommendation, but take a look at these, because look at that move, 63% in a very short period of time. Even taking this bounce here was still a nice little move. We picked up some of this, but we didn't pick it up all. So that's where, and then JNUG will react the same way, going back the other way. So, okay, my friends, that's it. I ran a little bit over, but I wanted to make sure that I provided you with some good food for thought. Please take that VIX chart, take it back, go to a weekly chart and take it back several years. We went back to 2015. Go back even longer than that and see, find the high points. Go to a chart of either the NASDAQ or the S&P and see what happened after the VIX hit its high points. Where did it go from there? And so that sounds like it's a fun exercise, and also it's excellent training. So until next week, keep your egg growing. We will be back online on Monday for the Aftermarket Monday. And for those of you who are premium members, we'll be back with the final hour at the top of the hour at 12 Pacific. So with that, God bless everybody. Have a great week, and I hope you like these training ideas. And if you do, hey, thanks for liking us on YouTube and Facebook, but please keep the likes coming. Anyway, aloha, everybody.